I mean, before I begin, let me wish the both of you, your teams, your families, a very happy 2023. All the best of luck to both of you. Charandeep, I want to start with, if you will, this name we were discussing with Deepan, which is Bajaj Finance. It's 10% this week, as I said. Is it coming to interesting levels where one can look at it? Do you already own it? Go on.
Yeah, first of all, I wish you and your viewers, the full team at CNBC, a very happy new year. Our best wishes, and thank you for your wishes. Great question, Bajaj Finance. That's definitely a first question to be anticipated because it's corrected so much and it's such a fancied stock, isn't it? It's been such a big multi-bagger over the years for so many people. But where our school of thought, Girik's school of thought, is that we listen to the market. No matter what fundamentals tell you, you need to listen to the market, and the market's telling you that despite nothing really going wrong, and despite there being a lot of growth, Bajaj Finance has been correcting consistently now for quite some time. Market's the best judge of a multiple. You want to give it 5 times book, 3 times book, 6 times book. The market's always right, okay, for the most part. That's what we believe. The second thing, which is a greater point, which we really believe, is that all over the world, right? If you look at the mothership market, that's the US, value is outperforming growth heavily. That's also happened in India. And that's probably happening in most markets all over the world. What the reason is, we don't know. Maybe growth stocks were very, very expensive and value stocks were too cheap. But to that point, this is common not just across Bajaj Finance. In growth stocks, there are accidents almost daily. Despite good growth or reasonable growth in select companies, the stocks are correcting. So we have to wake up, smell the coffee, and take note and adjust accordingly. So I summarize by saying the market's never wrong. It's just our adjustment that needs to happen in our minds.
Okay, all right. Noted that, gentlemen. Since we're talking about financial names, let's focus on the banking names as well. ICICI Bank, now that one's corrected a little bit from the top, at least I think around 8 to 10% from the recent peak. It's been a darling actually for the last few years, and you all held it in the portfolio. Have you all exited that position? And I think switched things around a little bit. SBI you always had. I think that's one of your top holdings in there. Have you all added a couple of other smaller banks like a Canara Bank?
Yeah, I'm happy to take that question. We have sector limits. We are very disciplined about our process. We don't cross a certain sector limit no matter how much we love the sector. We have 3 to 4 names in BFSI. You correctly pointed out some of them, and yeah, we have switched out of ICICI Bank a little while ago into another large money center bank. And so some optimization of the portfolio where we believe maybe too much was baked into the price, and we got a better opportunity elsewhere where we see great leadership, great earnings growth, and possibly a re-rating candidate.
Okay, all right. Taking out some positioning in ICICI Bank, and looks like some part of that has gone into a Canara Bank. The other one that is catching my attention is the power sector reforms. They have been looking up, and it seems you'll have added REC. Both REC and PFC, well, they have been doing quite well in the recent past. The central government has been laying a lot of emphasis on this sector. And a couple of names in there, REC, NTPC, they appear to be recent entries or recent additions in the last few months or so. What's your view on the space?
Take that. I think, to Charandeep's point, what he mentioned, what we are seeing globally, where, value is outperforming growth. And, we are actually seeing that in the price, and market is telling you where it wants to go. And some of these value stock had really become very, very cheap. And now with that, they're also seeing growth. So it's actually at a very sweet spot, some of these stocks. And that's why we feel that it's probably a good time. Our screeners are showing them. And what we try to do is we try to follow a process, and when it tells us, nobody in their right mind, probably 1 year ago would look at these value stocks, the PSU banks, but market is telling you that it wants to value it. And probably there was, the rubber band stretch was too much between the growth and value, and now it's readjusting itself, and probably it could go on for some more time. So I think that's how we are trying to position ourselves in some of these stocks.
Charandeep, Zomato is also one of your holdings. While exits are not uncommon in startups, right? A lot of people join startups because you get ESOPs. Once the company is listed, you've made a lot of money, you exit, you move on to different pastures. But the fact that Zomato has seen 4 big exits, does this dent the business model, your confidence in the company, and therefore your holding in the company?
So look, first of all, I must tell you that, look, our holdings are very well balanced. As you see, we build concentrated portfolios of about 20 to 25 stocks. We measure our risk reward in many ways, not just at the stock level, but also at the portfolio level, right? So, whereas we believe in something a lot, but we limit our holdings for various reasons. And what you mentioned could be some of the reasons. The thing with the Zomato is, again, this is not advice, it's just our thesis. What we love about the business is their phenomenal execution. And the fact that to us, cash flows are very visible and they could be a very, very profitable business 3 to 4 years out. What we struggle with Zomato in is that the near-term earnings are going to be really bad for the next few years, right? They will continue to burn a little bit of money because of Blinkit, right? Their food delivery business is a phenomenal business. It's a duopoly. They're doing very well. And honestly, 3 to 4 people exiting the business is not going to change anything. They have deep pools of capital and the ability to attract great talent. And the leadership team is more or less in place. So look, we do watch these with a fine-tooth comb. We have to, in stock like Zomato, balance near-term challenges with what we believe is long-term reward, right? So I think that, one can take care of risks like this in position sizing. You could love a business over 5 years, but it could hurt over 1 year. I mean, that's always a possibility.
Varun, do you track Balaji Amines? Any thoughts, if you do, of that space?
No, we've not really tracked that lately. We've seen it long ago, but we're not in any of the chemical stocks as of now.
It was done pretty poorly, 2,500 now, and just a couple of months back was almost at about 4,000 rupees or so. So that's a very sharp fall that we've seen in Balaji Amines. Market breadth, by the way, is now, but the market has recovered 138 points lower. But there is selling which is coming through. We were down, we recovered to the Nifty down being just 100 points, but very quickly there is a few more points on the downside. So 140 now. On bounces, there is this selling pressure which seems to be emerging right now. Varun, anything incremental you'd like to tell our viewers what you've done or how your thinking is evolving in terms of where to look for opportunities?
Sure. I think what's basically happening in the market, market may remain sideways or a little up and down because I think valuations are at average levels. So you might not see a lot of, correction or upside. That's for market to decide. But I think where stock pickers can add value is probably looking at the right sectors. And what we are seeing is some of the sectors that are leading are very different from what they were earlier. So earlier you had IT, pharma, consumers, chemical. I think none of them are leaders anymore. So I think most of them have become laggards. Whereas you have some other names like industrials, select banks, utilities are leading. So one needs to really pick their spot. And I think picking the right industries and then leaders in those industries is going to be the key.
All right, final question, gentlemen, before we let you go. The cash that you all have been sitting on is around 13 to around 14%. The last time as well, you all said you all are fairly comfortable. At this juncture, though, what's the mindset? Looking to deploy? Or given that we could be in for a bit of a rough ride, maybe a couple of quarters, will you all be comfortable holding on to this cash, maybe raising some cash levels? What's the broad sense?
I think it's a process, Nigel. As we always say, cash is the outcome of a process. We're not actively looking to raise or deploy. If we find those opportunities, we're going to jump at them. It really is a matter of time, hopefully, because we're always looking to be fully deployed. That's the intention.
Thank you very much, gentlemen, for joining in. Have a lovely weekend. Thank you once again. Get into a short break on that note. On the other side, we'll get you a check on what Dealing Rooms is saying in our segment East Street Chat.